What motivated you to get down this path, Dave?
Eunice was like, "Hey, bro, like I need to talk to you about something." I'm like, "What is it?" And she's like, "Look, you've been wearing like the same shirts for like 3 years now, and they're getting really raggedy and really holy, and you're starting to look like a homeless man."
she had an intervention. She sat down with you about this.
Yeah. And then she was like, "You need to buy some new shirts. Like, I know you can afford to buy some new t-shirts. Let's go buy some new t-shirts." And I'm like, "Fuck that. I'm not buying new t-shirts. I'm going to work out enough so I can fit into my old shirts again. I don't have to buy new ones."
Good strategy. Good strategy.
That's my strategy. Yeah.
She knows how to play your weaknesses.
She does. Appeal to my vanity.
Vanity and pride.
Well. On the plus side, it's working.
Yeah,
and
man.
may not be working in her benefit if you look this good, bro.
What are you saying about Dave?
I'm just
She's
saying.
in the other
I'm just
room.
saying.
You said that.
Oh, is she
Can you
now?
also cut that out, Alex? Just please cut that out.
Hi, Eunice.
How does it feel, Eunice, to have such a fit man around?
Hello, Barbarians, and welcome to the 8th episode of the LLB podcast, Low Level Barbarians, from Asia, on Asia, with debate and discussion on trending topics with our usual hosts, men of the high ground, Dave Chang.
What's up?
Jangan, the information super connector. How you doing, Jangan?
I'm in Kuala Lumpur. Hi.
And Andrew G, coming from London, the master debater. How's London?
London is cold. London is cold. They need to do something with the weather here. It's rainy and it's cold.
It's been surprisingly warm in New Jersey, the East Coast. So it's it's been good.
I came from Miami though, so this is a massive downgrade. I miss the beaches and the heat.
But I think, Alex, you need to explain why we have had such a long gap between.
That's a good point.
Last episode.
We had a holiday lull. I've been eating too much food, enjoying life in America. Andrew's been traveling from San Francisco to Miami to I don't know where, London now. Dave, we were in Las Vegas. Dave and I were in Las Vegas. That was hard to coordinate. We were a little out there. We couldn't focus. So
it was a good time. It was a good time.
It was a good time. Las Vegas was a very good trip. Then Jangan was the only responsible in yelling at us, saying, "Why is there no episode?"
I was working. I was looking for some 2 hours to get away from work. But you guys were traveling, holiday. I mean, going here and there. So yeah, but finally I'm able to jump out of Singapore. So I'm in Malaysia now. So first time since January last year.
Yeah, since you probably traveled out of Singapore, right? Does it feel to get out?
Yeah.
Does it feel good to get out? Yeah.
It actually feels good to get out. I mean, the previous weekend I already couldn't find out where to go in Singapore anymore. Like all the places I've been going to for the past 90 weekends. So
yeah. Fair enough.
Fair enough.
Yeah, it feels good.
What a place to be stuck. Singapore.
Huh?
What a place to be stuck. It's so tiny.
It's it's a bubble. It's very nice, but yeah. So it's small. So you basically can't just drive around. It's just 40 kilometers times 26. So yeah. But yeah, right. Good to be out. Yeah.
Yes, good to have you guys back. And for the first topic, we can't avoid this one. We're back to our favorite topic. On December 2nd, Grab merged with the Altimeter SPAC, which they raised $4.5 billion. That's without the pipe, I'm guessing. It's one of the biggest, if not one of the biggest SPAC deals we've seen. Currently, the market cap's around 35 to 40 billion.
It's down to 25.
Oh, it's down to 25. Well, if we
get trading at $6 today, 6.8.
Been brutal. It's been a brutal ride.
It has been brutal.
So, at what value would you guys start buying in then? What is fair market value?
Let's just say one of us is long and figuring out what to do with this stock right now.
5 to 10 million.
Let's just say I'm going to take some victory laps.
Well, yeah, the market's punished.
You know what? We'll talk about it in 2 years because I hodl.
That's fair. No, that's right.
Yeah,
that's
fair.
That's a fair point. We can talk in 2 years. We can talk. Yeah. That's fair.
Yeah, we'll talk about that. We'll talk about that, right? I mean, in comparison, even Uber with rideshare component, they're struggling. They're below IPO market price. They have a market cap of 70 billion. But they have more of a machine albeit a lot of the criticisms we said about Grab for rideshare is the same applies to Uber too. On the IPO, Ming Ma, the president, said their main focus is what we talked about: food delivery, financial services, and logistics. On the day of the IPO, the stock dropped more than 20%. It's continuing further down, spiraling down. So guys, what is the good? What is the bad? What is the ugly? Who wants to start?
I think David should start.
Okay, let me start because I feel like I've been sort of shitting on this company for a long time. So I do want to say something like kind of positive about it. So, and then just so I don't just kind of sound like a person who's just overly negative all the time. So I do think, to be fair, I mean, I think everything that we've said previously, I've said previously on the podcast, still applies. However, I think in this particular case, their drop in performance is not 100% idiosyncratic to the company. And what I mean by that is basically the market in general is having a pretty big correction vis-a-vis growth stocks, right? So if you look at sort of like a lot of the growth stocks that had sort of like really banged up Q1, Q2, Q3s earlier this year. So we'll just toss out some names that people might know, like C, Zoom, Peloton. So there's been a huge correction across the growth sector overall, right? So some of these things are down, like, I mean, even C is down like 30% from peak market cap this year. So, and for me, I think a lot of that is coming from the fact that the interest rates in the US are basically at a 40-year high. Like the reports came out like last week that the year-over-year CPI was like 6.78, and it's never been that high. And then the Fed in the US is already signaling strongly that they're going to start cutting back on both tapering as well as potentially looking into inflation hikes in the future. So I think what's happening here to a certain extent is that this is being priced into not just Grab, but the entire growth sector in general. So not all their fault.
A week before Grab went public, I was actually at Grab's headquarters meeting a friend, and it was a very funny feeling because when you're at that building, you look around across the expressway, you see a big Shopee sign. So basically, the Shopee headquarters is about I counted. I mean, so the sort of the distance in a line is about 1.2 kilometers, and if you drive, it's about 4 minutes. So it'll be interesting to see that. I mean, how the dynamics is going to play out. I mean, I'm in Malaysia now. I see Shopee Food is doing some crazy vouchering at the moment, and I've not seen anybody doing that level of vouchering for a long time. I mean, what? Ringgit discount with no minimum order. So I see friends who are basically ordering like 13 ringgit, 14 ringgit meals, which is essentially paying like 4 ringgit. So that part is crazy. Yeah. So I think how the dynamics is going to play out in the next few months, years. I think it's going to be interesting because the growth opportunities in the region for big companies are bound to collide, and I think both companies, of course, the valuations are very different in the public market, but both companies have lots of cash. It's interesting to see how this is going to play out.
Well, did you guys read the article I sent you earlier this afternoon about how Grab is buying Jaya Grocer for like the target price is somewhere between 1.5 and 1.8 billion ringgit?
Yeah, I didn't get a chance to read. I saw the headline, but I mean, I guess it's not surprising given their trend, right? They have to double down on like the three sectors we just talked about. Yeah, groceries and delivery, right? That they say it's a long way to go. That behavior is going to shift and change. I don't know if you guys actually agree with that. Like, personally, for me, I'm a little bit old school where I don't do groceries, but a lot of people I know do, and it's a big sector. Even in the U.S. now, like everyone I'm talking to, it's still a behavior that's shifting. You know, it's still also growing here in the U.S. So I mean, they have to focus on that. So I don't know if I agree if that's the right move or not, but it seems that they're doubling down.
I can comment.
I mean, I think.
Sorry.
Yeah,
sorry,
go ahead.
No, I was just going to say, like the last few months have seen a rise in funding for these companies like Joker. Joker got to $1 billion within 8 months. Gorillas, Katir, they've been blowing up, right? So I think the age of like hyper fast local deliveries is here, and there's no one really doing that in Southeast Asia. So Amazon's done a couple of things, right? They acquired Whole Foods a few years back, and then now they're launching an Instacart equivalent within the next few quarters. I think it's almost a play to do something like that. If they own the grocery chain, they get to own the customers. They also get to own the hyperlocal delivery experience and have like super fast 20-minute deliveries for most groceries. Now, doing it in Malaysia, I don't know why, because it's a 30 million market. It's not very big, and purchasing power isn't very high. I wonder if it's like a PR move, because honestly, losing 30+% of your value a week after your SPAC is pretty terrible. And I just to like pull it back to that commentary on valuations, and this is from the Grab's biggest fan. I think what's been happening is that the market has been punishing. Have you guys been reading any of the reports that are coming out from like any of the trading houses, or even just like Seeking Alpha has a write-up about them, right? I mean, it's a lot of the stuff we've spoken about before, but predominantly profitability numbers are awful. And second, the EV rev just doesn't make any sense, right? Like if you look at a 35 billion valuation versus the last quarter revenues, that's a 56x EV rev. Uber's trading at 5, right? So there's no way you justify 11 times the EV rev of Uber, and unless you have like ridiculous scale benefits, but it's an ops heavy business, so you're never going to have that ridiculous scale, right? So I think what you're saying is an EV rev correction, and the number's going to get lower. But then the question is there a potential like J curve with Grab at somewhat the lower half of that J curve, and then slowly trying to get things right? If they get groceries right, they get financing right, they've already got this base of customers, can they plug and play all these different pieces and blow up? I think that's at least for me, I think that's a possibility. I think if the number drops even lower, it's time to buy and just hold it for some time. But that's my thoughts.
Yeah, I had a couple of thoughts. So I'm with you on a couple of things and not with you on some other ones. So vis-a-vis the grocery thing, I agree with you. Buying like a grocery chain in Malaysia doesn't actually make sense to me. Like if we're playing that game, why not buy it in like Indonesia or Thailand or Vietnam, something that has a bit more scale? So 100%. But I don't think the analogy of Amazon versus Grab, like Amazon Whole Foods and Grab Giant Grocery, actually makes a lot of sense in this case, right? Because if you think about it, Grab already owns a lot of those like consumer relationships. I don't think buying Giant Grocer is going to acquire, as like a customer acquisition strategy, is going to acquire them that many more customers than they already have, right? And second of all, vis-a-vis the delivery thing, I agree that delivery is super important, but I don't think you need to buy the grocery chain itself to like really scale that business, right? I mean, I did a quick math on this, so they're paying like somewhere basically between like 8 to 11 million US dollars per grocery store, right? Because the deal is between 1.5 to 1.8 billion ringgit. Giant Grocer has around 40, I believe, stores at this point. So you just convert it to USD and do the math. It's somewhere between like 8 to 11, right? And then when Amazon purchased Whole Foods, they basically do the same calculation. They basically paid somewhere around like 30 million USD per store. I think, but the key difference here is a couple things. Number one, obviously American consumers are a lot more profitable. And number two, number two, Amazon's cost of capital is super, super, super low versus Grab's cost of capital, which is extraordinary. I mean, especially now, it's like extraordinarily high. So I mean, of course, I'm sure this deal was negotiated and they started talking about this like months ahead of time. And so it wasn't just like, they did it last week and we're announcing, but like buying or using the capital in this way doesn't really make a lot of sense to me if I was sitting in Grab's shoes.
So I'm just going to throw two facts out. One is, and this is obviously anecdotal, it's personal experience, but Giant Grocer for me has the best like grocery buying experience online of any other player in Malaysia, right? It's fast, the assortment is massive, and like they actually deliver within 15-20 minutes where I was living in Malaysia. So in that sense, like I used them a lot more than I did other players. Two is,
can I ask you a question?
Yes.
Was it Giant Grocer's own thing, or were they using like Happy Fresh or a third party player?
It was Giant Grocer's own thing.
Okay.
It was their own thing. Number one. Number two is like I actually think this is a play into the whole gorillas Getir space. Like Getir started this whole movement of like, so to be honest, like 6 years ago, even when I was at Lazada, we were trying to play with this idea of hyperlocal, hyperfast deliveries, 15 minutes for all products, right? That's like the end goal. The holy grail of e-commerce is infinite assortment, 15 minutes,
Yep.
right? Never 3 days or 7 days or however long it takes, right? And I think that all different business models in e-commerce will triangulate towards that. Like Shein's doing one variant of it with like just-in-time manufacturing. Then you have like Amazon trying to do the everyday shop, but with this hub and spoke model with micro hubs and micro spokes as well. And then you've got the Getir Gorillas Joker, 15 minutes, dark stores, dark kitchens delivery model, right?
Sure.
And I think like in Southeast Asia right now, there's been a couple of funding rounds, specifically in Indonesia, but also in Vietnam, for companies that are trying to do the 15-minute delivery thing. And I think this is a preemptive move to say if 15-minute delivery is going to blow up and there's going to be, let's say, somewhere between $5 to $10 billion of VC funding rushing into these markets, how about we spin off and create our version of it up ahead, right? So it's a preemptive strike, in my opinion. Now, the question is, can you take that model and port it? Like, speaking from experience, we tried to do that with Redmart, weren't very successful because there's a lot of things you need to get right with cold chain logistics. You need to get the operational staff being able to manage soft stuff like vegetables. It's not the same kind of business model. It's actually pretty complex. And then it doesn't scale to a marketplace model. Once you start serving a single large customer like Jaya Grocer, you can't really add on new customers with the same kind of cold chain logistics or internal, say, mid-fleet logistics, right? Like last mile, first mile, maybe you can, but mid-fleet, what do you do? Like when the stuff misses the cold chain. So it starts to get a bit tricky. But if they can, but we've had this discussion before that they are behemoth that's quite slow to move around, right? So if we don't think they are nimble enough to take that and port it, then that's fundamentally a non-synergistic acquisition, right? But hopefully they get it right. If anything, this sheer drop in, I mean, if nobody's shaking at a 30% drop in your share price 2 weeks post acqui, I think this would probably be a wake up call to start shaping up internally within the company, and ideally be a bit of a catalyst for change, right?
Yeah.
I would hope so. I mean, just anecdotally, actually. Sorry, just one thing. Like, actually, it's very clear in Malaysia what the shift is. Again, anecdotal evidence, but like I've been trying to get Grabs. I've been taking Grabs around the last couple of days, and like the supply outside of KL is almost non-existent. Like I was in Bansar, which is like a suburb of KL, at lunchtime today, and I tried to get just a cab to go from there back to my office in downtown KL, and I waited for like 15 minutes, which is kind of unheard of. So I clearly, you can, again, anecdotal, but like based on that, you can sort of see where they're really shifting their focus. Sorry, Alex, you're gonna say something.
Oh no, I was just going to say, I mean, the devil's advocate to buying Giant Grocer is that it's they need to start in a smaller market, and it was much easier for probably Anthony to have all the connections in Malaysia already. Like we're talking like lifetime of connections here, and it's like an MVP, right? So you got to, Asia is like this, it's very fragmented, and you got to test it out, build a playbook, and then see if it can port or not. And it may not necessarily port over to other markets either, right? And just like their finance and banking too, right? It's just not going to be an easy play like that. So, but I think it's just testing the waters and learning, and maybe they go for acquisition later if it doesn't work out. I mean, also look at their Happy Fresh play, right? That's kind of weird that they have GrabMart and Happy Fresh, and now they're doing Giant Grocer, right? So.
Well, I mean, this MVP is 10% of what you raised, so give or take. It's like 8-9% of what you raised.
Very expensive. Very expensive.
This is really expensive MVP.
Well, it just shows their conviction that they need to double down to pivot away from rideshare. Rideshare, I think, that in their decks and stuff, they say is growing a lot, but it's limited to your supply growth, which is car ownership, and also your demand. I think demand's going to be there, but fundamentally, infrastructure is not changing. So you always will have low fulfillment, and it's just demand will always outstrip it, but it's just limited, right? It's a very constrained kind of core, and they need to pivot to things like delivery and other things like that can have higher capacity utilization, right?
I think, Alex, if you look at their Q3 earnings, and the whole focus is essentially on deliveries, different kinds of deliveries. I spoke with a few investors who are looking at the different parts of the business of Grab, and I think for ride hailing, everyone agrees that you are going to make a positive margin for that. But what people are sort of not sure about is that if you can raise the margins or grow the market, so basically, or are you going to be stuck with a very, very incremental growth for the next few years? And I kind of agree with you the notion that okay, buying a supermarket which is doing well in Malaysia sort of allows them to learn how to do the supermarket, because they're doing supermarket, they're doing dark stores in many places, and I think the difference between this and Red Mart is that first, I think the volume is probably higher in Red Mart when Red Mart was acquired, and the second is that it had offline presence. So essentially, it would be something like Alibaba with Hema, right? I mean, you would have different touch points, and you would have the ability to experiment how you integrate this into your customer base and your sort of a fulfillment ecosystem. So it's a question mark whether they can figure it out, but I wouldn't write it off. I think it's an interesting attempt. So it'll be difficult to integrate, but let's see what they can.
Well, that being said, let's talk about the tougher stuff that the analysts bring up in all of their analysis and all the reports, right? The bad stuff is that there's no distinguishable moat, and every single pillar they're kind of pushing into is now going to have very fierce competition, right? From finance, which is very fragmented with the banks and also the other financial players. Even Shopee has Pay, right? Food, even aside the traditional players like Food Panda, you have Shopee doing food, and they're going back to discount wars, right? Rideshare, like I said, I think to me it's limited incremental growth. It's just the nature of the region. It's not going to be like America that's very developed, or a big market like China where strong infrastructure, strong government, and then it's just a big market, right? I think it's not like that in Southeast Asia. And then incentives has to be baked into the cost. I talked to a lot of drivers in the U.S., a lot of new drivers in Las Vegas, and they're making a lot of money only because of incentives. And then I talked to the guy who's struggling after he got off incentives. He says he's like dying. He's like working nonstop, 12, 15 hours a day trying to make ends meet. But all the new drivers, they're happy because they think they're making a lot of money easily. But once that stops, I think it's the same thing in Asia. So I don't know. There's on all these fronts, it's going to be tough. Do you guys think this is going to be going to suppress Grab's stock price further? Competitors will take over. Do you think Grab has a fighting chance to dominate in some of these pillars that they're focusing on?
Ooh, I mean, it's a tough question. I think a lot of it also depends on what else happens in the capital markets in the next couple of months, right? Because we still have like one or two big IPOs potentially that are left that are very relevant to the space. And specifically, I'm talking about GoTo, right? So.
Yeah.
And we talked about this like a few weeks, like last time. I think my point is like if GoTo, I struggle with this because on one level, I really do want them to do well, if only just for the sake of the ecosystem, right? I think this is like a big deal. It's a bellwether deal for the region, and like this is going to be the benchmark and how people are going to look at the region for a long time. And on that metric, of course, I want them to do well. But in my perspective, I think there's a lot of like these really core structural changes or structural challenges that they face that they don't necessarily, I don't see them having very clear answers for, right? And so they do have a lot of money. But I mean, if you're going through like, what was it, like 900 million a quarter or something like that was their last their Q3 result. I mean, I know some of that was like financial stuff, so it's not like it's not going to be recurring. But I mean, let's just call it what it is. They're spending like 400 million a quarter on subsidies, right? And they're going into an increasingly more competitive environment, as you've mentioned. Shop has a lot of money. GoTo will raise a bunch of money theoretically, and they're going to probably reunite or start competing again along that vector. So for me, it's a tough road. It's going to be a really tough road for the next couple of years.
Yeah. Well, I mean, maybe GoTo has the right strategy where they just focus on one giant market. I mean, it could be a very big company itself in Indonesia alone, right? It maybe end up being fragmented. Things were moving towards everyone coming together and merging, but maybe it goes back to the nature of the geography and the markets. Maybe it ends up being more fragmented market in the future. Do you guys think that's possible?
I think Alex. I mean, I don't believe that Indonesia alone is able to sustain the valuation of either Grab or GoTo. I mean,
currently, yes. Yeah.
I mean, of course, if you wait for 10 years, you can do the calculation. I mean, 5 years annual growth. I mean, how much will you end up in 10 years time? But if you look at Grab, I think a lot of what they do in Indonesia is being subsidized by what they're doing in Singapore, in Malaysia, and to a certain extent in Thailand. So one number you look at Grab's Q3 results is the number of transacting users, 25 million. It's I mean, how many people in Southeast Asia would have access to a smartphone, and how many people are transacting on Grab on a monthly basis? I think there's a huge discrepancy, which means that I think in many aspects the market is not there yet. I mean, if you look at some of the movements of Grab recently, right? I mean, they are doing certain things to target differentiated markets because they probably realize that it's a market that you can no longer just burn to grow and capture. You need to have differentiated service to capture different parts of the market because their consumption power, their consumption habits will be different.
Yeah, that's a good point. Okay, and anyone want to say maybe something positive again for Grab, or maybe what's the secret that they're going to hit before we move on?
I mean, not positive for Grab, but let's put it this way, right? There's, again, if you're an external investor trying to invest in Southeast Asia, there's very few places to invest in, and they're one of the leading players in the pack, right? I think there's going to be a lot of positives from this. Like even with the share price where it is, a bunch of Grab, management is going to get out and become angel investors or get out, start their own businesses or their VC funds. So I think it's great for the ecosystem. But then on top of that, it's news for Southeast Asia, right? It creates more opportunities for more investments. If it's not Grab, other companies to figure out what to do better. I'm just going to comment a little bit on this idea of fragmentation. I think in Southeast Asia and German, you also look at South America a fair bit. There's always parallels between these two places because you have this one large country that takes away most of the market share and interest and VC heat, right? That being said, different markets are starting to, but in these big markets, you're purely playing the demographic dividend, which is like there's young people who need specific services, so we can build this ops-heavy models. But then you look at the heavy hitters coming out of Vietnam, Axie Infinity, all these weird crypto token play-to-earn games. That's just YGG. It's just blowing up, right? So I think there will be these interesting opportunities coming out of other markets that will allow like slightly different business models to evolve. And then with specific for this ops-heavy model, go to Grab. We're going to continue that war in Indonesia, but Grab has a foothold in all the others. So even if it has an ex-Indonesia story, not too bad.
Yeah.
I think Grab and Shopee are at the advantageous point compared to GoTo. Oh, yeah. Do you guys follow what was discussed at the Reuters conference this month?
No. Let us know.
Basically, there was one partner from Golden Gate Ventures saying that I think the valuation in Southeast Asia has become irrational, and that triggered off like a whole discussion because I mean now if you look at the fundraising news for the last few weeks, 80 million, 30 million, 100 million is like it happens like almost every day. And if you look at some of the new funds being raised by VCs, I think Alpha GWC is having 500 million in the next fund. It's absolutely phenomenal. So.
Well, I think fundamentally and historically things are overvalued, but I also feel that we are looking at a new paradigm. VC is just getting bigger as an asset class, and thus what was normal small seeds get inflated, A's get inflated. Everything is just shifting up, and of course with that comes noise. And I think there's going to need to be a correction. But I think it's essentially what we're looking at as a new world where there's just more money, so there's less deals chasing it. What happens is we need more people building, I think, and I think the overvalued is kind of true. I was talking to one of my friends in New York. He was just visiting. I won't say where he's from, but his company had raised over hundreds of millions of dollars. I don't want to say what's this. There's only a few people out there, right? But and it's kind of scary. He was telling me that a lot of these companies actually don't have substance in it, but they have the ability to raise, right? And I think what we're seeing in the coming years is a lot of these guys who have raised are going to have to close shop. And I don't know if it goes with the downturn of the markets or not, but there's a lot of people who've been able to capture a lot of money without actually, it's all top line. And then now it's a very kind of big struggle to see like can we somehow monetize it and A lot of these guys, I think, are not going to be able to do that. Some will, but it's I don't know how that's going to affect the market, right?
I mean, but this is like the thing, right? And this is, I think, what really, a couple months ago, we had like this whole conversation about ONE FC, and I was thinking, and I think I was, pretty bearish on the company, and I was just, after that conversation, I was trying to understand like why it was that I was so, kind of down on the business, and I think I finally like honed in on what it is, and it's like, this is what exactly I mean. Like in this environment, right? You have a company that goes out there. And you raise a ton of money and you're completely overvalued. And it's not even like, Facebook in like 2008 or something, right? Where they had a business and they just raised some more money to like, carry them through a potential winter, right? So there was actually some fundamentals there. This is purely, a kabuki, right? But then the problem is like, there's human beings involved in this process, right? You have to go hire people and then you have to fire people. And there's consequences to what we do, right? Like, of course, we can sit here and we can make arguments like, oh, caveat emptor, no one's forcing to work at this company and everyone understands that startups fail and all that sort of stuff, right? But like, I think at a certain point, as an investor, as an operator, there needs to be some sense of responsibility and some accountability for everyone involved, right?
At a fiduciary level, yeah. I
not
agree with you.
Not even fiduciary. I'm saying like a moral level. Like, how do you treat other human beings? Like, maybe I'm getting off. I'm kind of going on a tangent here, right? Yeah. I mean, I know this is not like that kind of podcast, but like, like, I don't know about you, but I've laid off a lot. I've fired a lot of people when I was a Rocket, and it is, it's hard. It's hard doing that, but it's obviously, and also I'm saying this as a person who's been laid off in the financial crisis myself. It's difficult both ways, right? And I just don't. When I see this kind of stuff, or when I hear about this kind of stuff, where like where someone's kind of nakedly telling you that you've raised a bunch of money that they have no business, or they had no business raising, or at a valuation, and we know what's going to happen because they're VC funded. They're going to go out and hire a bunch of people because they have to spend the money, or that's what their mandate is, and then they're going to burn through all their cash because that's the mandate. So, and then what if they lay off like 80 people or 100 people, or like 80% of who we hired? Just,
a lot of these companies have like at this point, hundreds of people for sure. But I'll take the devil's advocate to that. I'll take the counter. Like I think for a lot of the business that we did, when it got too big, a lot of the guys who were further down the chain, yes, that's very bad for them. But say for like us, like, well, we got another job, and a lot of these guys, and like I know the salaries that they're paying for these companies who raise a lot of money. They work there for, dude, this game can last for a few years. They could keep raising rounds, and you build a career, you fail forwards, right? You take higher salaries, more equity in the next round. The guys at the mid and top, they're going to be fine. Of course, like morally, from a fiduciary, from an investor standpoint, that's just not fiscally responsible. I think a portion of the employees are going to be fine, but yeah, a portion of them, it is pretty bad. I think we've all been in that spot where we had to let go of people. It is really ugly, and it is morally wrong. I would agree if you're just being reckless without thinking. But at the same time, it's not like a lot of these people, even like at the top or in the middle, they know the game. A lot of them are playing the game too, right? Which leads to the whole financial engineering kind of thing that we've been talking about, like subtly across a few episodes too, right? So I don't know. I mean, I agree with you.
Sorry, just one thing, John. I think like maybe the top 5% of the business knows what's actually happening, and then the other 95%, I don't think they do. Like I have seen so many companies do this where they just shut down an office overnight. There's no communication to the regional, to like the country level team.
Yeah, that's true.
The regional team basically just fucks off, right? Well, and they screw over all the employees. They screw over a lot of the vendors that are owed money, right? And then the senior guys, they take their director fees and then they fly first class to Bali for a month to unwind after a super stressful fucking thing, and then they go do the next thing. It's ridiculous. I mean, come on.
What was the company that recently fired?
I don't want to
900 people on Zoom?
Better.
Better.
Yeah, that was ridiculous. Okay, but like
it was ridiculous.
I don't think any of us have ever done anything that level. Like you have to do it face to face at least, right? That's just
can we separate two things here? Like, so first, low EQ styles of firing is terrible. I think we can all universally agree, right? And just being a dick is not a good idea, right? So I think we all agree on that. Now, whether or not you're putting your heart and your soul into a company after fundraising and you're just going, because at the end of the day, I think people, even if they're not interested in the greater good of the world, are also interested in saving their own internal egos and making sure there's a good narrative behind, something that they're working on, as opposed to just, I raised a bunch of money and then I messed up, right?
Well, yeah, it's
What
easier.
Sorry?
Easier to believe that.
Easier to believe that, but anybody who does a bit of DD can figure things out, right? But to this point on VC, like, look, I think the VC model where a lot of money can be raised by companies that have questionable metrics or questionable product market fit or even questionable strategy or like it's terrible from a classical point of view, right? Like in pre 1980s, if you had an idea, you had to find a way to make it profitable and then scale that idea, right? Now you can be unprofitable for years or never even have to make any revenues and somehow get acquired, aka what WhatsApp did, right? Now the question then is, does it make sense to allow these companies to continue to run the way that they do, and is there value in it? And I think one thing the VC model does is it allows people the ability to make mistakes more so than traditional companies can, and therefore get closer to product market fit and providing some kind of utility, and it gives them a runway to get to that utility, right? Now, at the end of the day, whether or not the product is actually utilitarian for whatever it does, that's like something we can debate for hours. But I think what it does is it creates the opportunity for them to make those mistakes. If you couldn't make those mistakes, a lot of people wouldn't have wild, crazy ideas and be able to fundraise. Today, I just get the case in point. This morning, I'm speaking to an investor, like an entrepreneur, with an idea that honestly is maybe 3 years away from monetization. It's an edutech idea. It's pretty cool what they're trying to do, but I don't think they'll be able to figure out the monetization model so quickly, right? In the traditional world, they would die after 6 months because they would run out of money. But they live in a universe today where a guy who's passionate about education gets to meet a bunch of angels and VCs and get enough funding to run a sustainable business for 2 to 3 years before figuring out monetization. It's almost like R&D for scientists and grants. We're almost giving creators, artists, and scientists money, except in this case, they are startups.
Can I just say one comment?
Sure.
Like, so you said something very interesting, and let me explain the game, right? So you are right. You raise money up to the point where the valuation is big enough to be acquired. So that's where my friend is at. If he raises one more round, they can't be acquired anymore. They're like, they actually have to make it work. Kind of like what we're seeing what's happening with Grab, right? If you go beyond a certain point, you actually have to make it come true. Now, if you raise $100 million, $200 million, if you could still be, the valuation is maybe what, half a billion, 600, 700 billion. Maybe there's only a handful of guys who can buy you out. And so a lot of these guys are struggling to get to the point to do a buyout because they know that like the risk is so high that it might not clear market. So
I disagree that they need to make it work. Who do they need to make it work for? The problem is, right, the principal agent problem, the problem is it's broken everywhere. Your friend, for example, is raising from VCs who truthfully don't care if your friend succeeds.
Yeah, correct.
Right?
That's true.
They care if one of the companies in their portfolio succeeds, right? It doesn't matter if it's your friend or if it isn't, right? If your friend fails, they've got 99 others and one of those 99 needs to succeed, right? So the incentives are misaligned in multiple levels, right?
Exactly.
VCs are investing, like if your friend raises from Tiger at, I don't know, at a unicorn valuation, right? Tiger still doesn't care because they have 10 others that could potentially succeed, right? So the buck stops at public markets, which means as long as it's within private and secondary markets, everybody's like, you can fail. And then your guys have a nice little thing to carry on their CV and go get hired against somewhere else.
Which is why, like, unless you're at the very top, or maybe say you're just a co-founder, not at the top, the incentive is for you to cash out as soon as possible, right? And then you're not building value. You're not like, you're again part of the machine in the game, right? So it's like you said, the incentives they're not aligned. That's really bad for a company in terms of long-term fundamental, value building exercise, right? So, yeah. Okay. Any closing comments before we move on, guys? Jangan, you didn't say anything about this. What's your take on all this? Or Dave?
I was trying to figure out my Wi-Fi, but
Welcome to
I mean,
Malaysia.
I'm so used to Singapore Wi-Fi anyway. So
Hey, Wi-Fi in KL is fine, all right?
I'm in KL. Come see how the other half lives.
Wi-Fi in Pavilion Hotel in KL is not fine.
Okay, yeah.
Wi-Fi in London sucks. London needs to get their shit together.
The West
Third
needs to
world
get their
country-
shit together.
The West needs
Too
to get
much-
their shit together.
Yeah.
Too much
Yes.
lobby.
Anyway, Alex, just one comment about the firing part, right? I mean, I think first we'll have done some firings in our life and multiple times, and I mean, it's never been easy. Whatever we have burned at Rocket compared to whatever the companies are sort of offering people now, it was quite modest, to be honest. So,
Yes,
so,
I agree.
So on the one hand, I was also reflecting about Dave's point about, I mean, sort of the duty to the people who sort of fight with you, who are in the trenches and who believe in the dream. I think looking back, and I think the people who were damaged the most during this exercise were the people who were sort of put into a compensation or a role that they were clearly not capable of, or at least at that point in time. So you have people like running customer service who are sort of raised to be head of customer service or head of operations with 1 year customer service experience. You pay them like 3 or 4 times the market salary, and I see lots of these people after this high and after they get retrenched, they find it very, very hard to adjust back to normal life and to align their expectations. I do see that happening at I mean, in the past, happening at all levels of Rocket companies, right? I mean, people sort of look back and say, hey, I've had high, and where do I go next? And it's very difficult for them to adjust back. And I mean, this is something I feel particularly bad because I think lots of these people are very capable. They were just elevated to a position which would otherwise take them, I mean, at least half a year more, or 1 year more, or even 2 years more to reach. And now you put them there, and they can't find a way out of this, sort of psychologically or otherwise.
Yeah, I mean, that's a very good point. I think if this one thing I could think of after listening to all of this is like, someone needs to, like, if you're a VC or if you're an investor, you need to think about the morals of this. And that's definitely missing in a lot of the conversations and discussions. That's massively important, especially if this ecosystem gets with more money coming in. That's just going to cause more problems with a lot of bad actors going forward. So, shall we move on?
Yeah, let's move on. I feel like this has been a bit of a tangent. I mean,
okay, I think that was good, but okay. I guess we'll briefly talk about. I mean, we've talked about this before, which is at least different parts of it. The metaverse. I guess now everyone's calling it
Metaverse,
right? Web 3.0, right? We've talked about crypto
NFTs.
a little bit. In fact, 3 of us have invested in the same crypto company. Apparently, Andrew had some yum-yums didn't share. He's invested in like 100 more crypto companies after us.
Dude, y'all need to come to Art Basel. You know, big takeaway, Art Basel is where it's at, guys. I went there and now I'm a convert. NFTs, blockchain, DeFi. Like I met
what did you invest in? Tell us.
What did you invest in?
All right. So before getting into what I invest in, like the shocker for me was how Art Basel isn't about art anymore, and it's all about NFTs and blockchain, right? So everyone there is trying to get into selling their art as digital art instead of physical art. But what's really cool, okay, so check it. Here is an incredible business model that I discovered when I was there. There's a guy who helped a rapper launch 1 million albums as copyright protected NFTs, right? Each album was sold for $1. So the said rapper achieved $1 million in sales. Same rapper would probably make only 50,000 a year on Spotify because that's the average income an artist makes on Spotify. So it's 2,000x the annual income of an artist on Spotify by cutting out the record labels, the entertainment moguls, the managers, the talent agencies, and everyone in between, right? So I think Web3 is going to blow up 2 things, right? One is, so first of all, if we take a step back, I'm not so crazy on the speculative asset front because that's just hoping some other idiot buys it from you at a more expensive price than the price you bought it at. But what I'm interested in is productive uses of NFTs, blockchains, DeFi in the real world that we live in, right? So this is a perfect example of a guy who is removing that middle layer that takes away so much from creators, right? And it can make you already envision a world where YouTube, Patreon, Spotify, exist in a decentralized way that allows creators to make lots of money, right? So that's like one big angle. The second thing that at least like I'm excited about is this interaction between every week now I'm receiving a deck from a startup that's trying to do an Axie Infinity equivalent. This one I'm still a bit on the fence because okay, like I hate to break it out this way, but whoever thinks Axie Infinity is just a game is confused and lying to the either confused or lying to themselves. Axie Infinity is a casino on steroids, right? Except the chips have been replaced with cute little figurines. That's it. You basically pay money to get these little, little Pokemon looking things, and then you use those things to play, and then maybe you win more of that. It's basically gambling, right? This world that we live in, where we're calling it play to earn and pay to play to earn, or play to pay to earn, uh, basically is just another way to have legal casinos built on blockchains, right? This one, a bit less excited about, but that being said, we can't avoid the fact that it's going to blow up and be a several $100 billion industry in the next like 2 to 3 years, right? This whole like gaming meets metaverse meets NFTs as a unique way of creating scarcity, that's going to blow up. Sorry, go ahead.
Let's take a step back, and maybe Dave, you could explain what is your understanding of what is the metaverse for our audience, and what does that encompass?
Oh, I think you should explain it, and then because I have a point about this, and I
Okay,
think
all right, I'll
try.
I'll try.
Yeah.
Right, so like Web 2.0, which is like what we've been seeing for the past decade, right? It's just all the internet services, marketplace, e-commerce, everything we know as it is. Web 3.0 encompasses a few different things, kind of like what we talked about with crypto and what Andrew was talking about, NFTs and finance. Basically allows you to put memory, assets, and ownership natively on the web. So you don't require, you could do everything decentralized. There's also the component of AR and VR, which is the actual physical blending of digital and the real world, right? With VR, the question is, do people go further, deeper into fully digital life? And then there's also ARs, like how do we interact with the world that's augmented, right? And then there's this idea that there's a persistent cultural shift that we're seeing, especially with COVID, where people are living more in the digital life. So with remote work, working from home, right? You pretty much are just working on your computer all the time, and that's your digital community and your digital space. And so what it is, it's this whole putting everything all together, all these kind of different pillars, and it's a blending of reality and digital world. And then essentially that's what, combined, it's the meta, you sit inside the metaverse. And one of the other arguments, there might be a bunch of different metaverses, which would be more of the multiverse, which we could discuss. What do you think, it's more of a metaverse or more of a multiverse? And then how does this kind of shape out? Dave, what is your point?
Can I take a step to like twist your definition a bit more? If we take a step back, right? So Web 1.0 was the origin of the internet with dial-up, and it was pretty much served only one way. You were the consumer, and then there was a site where you could get information from, right? So that's Web 1.0. Web 2.0 was when users were able to create content. And so we saw the rise of Instagram, Reddit, Facebook, and all these like massive social networks. And the network effects of this were big enough. But what happened then was several companies became tax collectors and in effect monopolies that were able to become gargantuan controllers of the highways where the information was passing, even though that information was yours and you were creating into that, right? It saw the death of news publishing, it saw the death of papers, it saw the death of a lot of traditional forms of things that we took for granted in the 90s, right? But then, that's Web 2.0. Web 3.0 is an attempt to take the best parts of Web 1.0, where there was no big monopoly holders, and the best parts of 2.0, that is a two-way creation street, and create a way for creators and individuals to own their rights, right? So the idea would be, could you create entities where creators get rewarded for what they're doing, where individuals get to own their data, there's more privacy, there's more decentralization as a way of reneging control. It so happens that the technology to create Web 2.0 started with the crypto revolution, and we're starting to see that. But right now, what's interesting is several non-related things are happening at the same time, right? Which is one, you have this crypto revolution, which is a way for people to own their data, to be more autonomous, to be more decentralized, and not to have central control. At the same time, you have this rush towards AR, VR, and this massive blow up of gaming in the last 2 to 3 years. And then on the third side, you have this idea of how do you define ownership, which is kind of weird, but that's also almost a derivative of the two, right? In this metaverse or in the internet, theoretically, you can create infinite copies of anything. But then if there was a way to create scarcity, then you could create pricing and have the same effects that you would do in high-end luxury fashion, which is what's happening as a result of these two. So we're seeing a convergence of these things, but ultimately it's like crypto, blockchain, AR, VR, and then what can you do with scarcity economics?
See, I think you actually brought up a really interesting point, Andrew, because in all of my readings and understanding of metaverse, decentralization versus centralization has not been a core component. So I do think we should have this conversation about like what we actually mean when we say metaverse, because I do think there are a bunch of floating definitions out there, and there's not necessarily like a clear consensus on what everyone means when they say metaverse, right? And so where I was going to go actually is like, so have you guys heard of Matthew Ball? I know, Alex, you probably have, because I've told you about him.
Of course, you love him.
Yeah, did you read his
I love his
33,000?
This guy
when I
is
come
awesome.
back, I'm gonna go deep. I'm gonna go deep when I get back. Yeah.
Did you read his 33,000 word magnum opus on the metaverse?
Not yet.
Yes, it's incredible. It's incredible.
It's incredible.
I recommend everyone on this to read it. Yes.
I agree with you. So just for the audience, if you guys are interested in media, digital media, metaverse, the future of gaming, movies, TV, whatever, do yourself a favor, go to Matthew Ball's website. He is, in my opinion, like one of the leading thought leaders. Stupid term. Leading minds, yeah. Leading minds that writes about the subject. He's excellent. He was head of Amazon Studios, blah, 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 great credentials, but just like very clear thinker. And all his pieces are like 10,000 words. So it's a bit of an investment, but like if you're interested in the topic, go read his shit, and it's time well spent. Anyway, so to where I was gonna go, right? So in preparation for this, I actually went back and I reviewed some of Matthew Ball's work. And Matthew Ball actually has a really interesting definition of what the metaverse is, or he has these characteristics of what defines the metaverse. I'm just gonna go through them real quick, right? So the number one is it's a persistent world. So pretty self-explanatory. Number two, it needs to be synchronous and live, right? Number three, there cannot be any cap of concurrent users, right? So there's no, it's not like Fortnite where it's like 100 users max, right? There is no concurrent cap. Number four, it needs to have a fully functional economy, right? Number five, it needs to be an experience that spans both the physical and digital worlds, right? Mm-hmm. Number six, it needs to offer unprecedented interoperability, sorry. And then number seven, it needs to be, and this is what you're kind of getting at, Andrew, it needs to be populated by content experiences created by the users, right? So if we take this definition of what the metaverse is, right, it actually already exists. It's just called the internet. That's the question.
Wait. Let's take a step back. It's not the same as the internet. I think the closest we've had to what he describes as the metaverse is Fortnite, the game, right? So if you think about this, it's the largest game by number of people playing it, and the way it works is it's a persistent world, right? Everybody clues into the same map. Whether it doesn't matter what time you clock in, what time you clock out, that game continues to exist. It's synchronous and live. It's close to a lifelike experience, right? In the sense that you have an avatar there, your avatar gets to wear clothes and do dance moves, etc. And there's no real cap. I mean, millions of people can play on this at the same time. It doesn't really have a fully functioning economy. It's an experience that arguably does not span digital and physical, so that's where it stops his definition. And it has some interoperability. Well, one second. What's happening though in Fortnite, which is really interesting, is this bridging of content and experiences, right? It's not just about going there with a gun and shooting some people. They're starting to create events. Marshmallow had a concert there. They had this massive black hole event where they actually stopped people from playing just to launch a new series and new characters. Now The Rock has a character there. So they're creating these in-world experiences. C Group, I'm just going to go sideways, has done the same thing. So they have a couple of games where they've actually had in-game live DJ performances and, celebrities from Brazil show up inside the game for the Brazilian players, right? So the metaverse for me is closer to, if anybody of you has watched Ender's Game, it's this persistent 3D world where you get to play in it. Now, what's happening there is, one, you have the VR version of it, but you also have the potential for AR, right? Meaning, could you create layers of things that overlap on the existing world that we have, using these glasses that Snap is producing, that Facebook is producing, that a few others investing in, arguably Apple's coming out one in 2 to 3 years, right? That will then create this layer of artificial graphics on top of the real world that interact with stuff in your VR world, that interact with stuff in the real world, right? For example, think of a piece of graffiti that's on a building, but you can only see that if you have these specific glasses on, right? This is arguably like one part of the metaverse that could exist. It's persistent, it's always there, you only see it if you wear your glasses. Now, where it relates with the crypto stuff, there's three things that he mentioned, right? Offers interoperability and has a fully functioning economy. Theoretically, then, like, these kinds of artistic products could be scarce and have value associated with that, and that's why, like, the creation of NFTs and like blockchains are able to support some of these metaverse like goals, and that's where, like, the interaction is happening.
Yes, but I don't think Roblox, or sorry, I'm getting ahead of myself. I don't think DeFi is a central component to creating
not DeFi,
competitive
NFTs,
economy
not
or
NFT.
interoperability.
NFTs will.
Right.
So what? Why there's a big investment? Look at C Group making these massive investments in companies that are supporting NFTs. You see a lot of gaming players doing this. YGG is doing this. Axie. If you look at A16Z's fund that is investing in gaming, a lot of it, and the reason is because loot is what people are chasing in a lot of these games, and the idea of creating false scarcity and interoperability between games could be a reality, right? You could have loot in one game that you could carry to another game. How do you create the rarity of that and create prices behind it and a fully functioning economy behind these products, right? For example, right now, there is a blockchain called Loot. Y'all should check this out. Loot blows your mind. It's loot without a game, right? And some of these loots are trading for ridiculous numbers because there's a whole community of creators that's come up around creating like interesting kinds of loot. And so what's going to happen then is, theoretically, if I could think about games, like you could sign up to a platform that has 200 different games, but products and coins and things within those games could go from one to the other, right? And underlying that is an economy that's built off, it could be a central sort of structure to control that, but it's ideally decentralized so that there's interoperability between different types of platforms as well, right? And then you take that out and you can use some of that loot in the real world as you interact with things in the real world. That is the direction the metaverse is going.
No, but that's exactly my point. Like, I think we're actually on the same page because I agree with you. You don't like that ecosystem, that interoperability is core. But then the best example of that is Roblox. Roblox has created an entire ecosystem of just this specifically, but it's not DeFi. It's just centralized and it's controlled by Roblox. And that's my point of contention with you, is that I don't necessarily think that the NFT, I mean, I can see clearly, obviously, why that would be beneficial to the ecosystem, but I'm not saying that my opinion is that it's not a prerequisite.
Yeah, I mean,
but actually, I have a different angle. Oh, sorry, go ahead. Yeah,
no, go ahead.
So I do have a different angle and on this, and I stole this from someone else, so I'm not taking credit for this. So I actually think that the natural on-ramp to the metaverse isn't actually gaming. I know gaming is what gets all the popular attention because that's what's in popular culture, right? That's, I mean, what is that? Snow Crash. Snow Crash was, you know, it's a sci-fi book. It's a work of fiction, right? Obviously, Ready Player One. You have Fortnite, blah, blah, blah. These are all sort of like the hallmark examples of like what the rudimentary form of a metaverse is, right? But if you think about it, like what the definition of the metaverse is, it's really sort of like this blending between the physical world and the digital world. There's a sense, a lot of like interoperability and tangibility and all of the things we talked about, right? And if you think about like what that is and like what actually the clearest manifestation of that is in our everyday lives, it's not actually gaming, it's just work, right? Like work, I think COVID has really accelerated this. Like when people say like, I work from home, you don't actually work from home. You work on the internet, right? And the internet that can be anywhere. right? And so if you think about it, like if you use like Teams or Google Docs or whatever, you're essentially kind of logging into like sort of some like rudimentary form of this, right? So you go in and you have this ecosystem and you have all these collaborators and it's persistent. You can bring on those you want. And for me, this is sort of like actually the more natural on-ramp for a couple of reasons, right? So first of all, the AR VR argument I think is a really interesting argument because like VR is what we define as sort of like it's an engagement thing. Like you have to be fully immersed into VR for that to actually take place, right? But the problem with that is like, in a 24-hour day, you spend 8 hours sleeping, 8 hours probably working, and then you have 6 or 7 hours left for entertainment. So VR is competing for that 6 to 7 hours of entertainment. That's very difficult because there's a lot of, as we mentioned before, there's a lot of great content out there. You can do a lot of things, blah, blah, blah. However, the 8 hours that you have set aside for work, you basically have set aside for work. There's not much else you can do with that time, right? So that's one. Number two, I think this actually mirrors the adoption of the PC in many ways. If you think about it, like the early adoption of the PC, like in the late 70s, early 80s, it was actually driven by enterprise. Basically, companies saw productivity gains from PCs. So they bought a bunch of PCs for everyone that worked there, right? And then only then do people actually start using PCs. Then they're like, oh, maybe I want to buy this for my consumer or for my house or for personal use, right? And I think this also kind of ties into the whole COVID thing, right? If we're talking about like the future of work and the future of like commercial real estate to a certain extent, is it cheaper to buy everyone a VR headset, or is it cheaper to go rent 50,000 square feet somewhere for your entire workforce, right? So the first argument is basically it's one's a use case or it's a time argument, and two, I'm getting my arguments mixed up, right? But it's both like it's a use case argument and I'm blanking now. Okay. So but anyway, my point is I think like the actual natural on-ramp for the metaverse is more likely to come from an enterprise angle than, addressable market size. That's the last one I forgot. Obviously, the enterprise market size is much larger than the gaming market size, right? So I think for these reasons that the likely on-ramp is actually enterprise and work, not gaming.
Jiangyan, do you want to comment on how you think the metaverse is unfolding and the different components?
I think you already said lots of things. Maybe have you guys read this sci-fi book by a Chinese author called the book is called Three Body?
Yeah, everything about
I've heard about it. I've heard about it.
She's in you. Yeah, I read it.
Yeah, it's new. So basically, he did a speech about 3 years ago. I think in the US, in his poor English, and I think one line in his speech sort of struck me, and it stays with me until this day. And he said basically, "You promised me an ocean of stars, but you actually gave me Facebook." Yeah, maybe be too philosophical.
Why don't you unpack that for us?
Yeah, is like characters?
The thing is, like every week I'm talking to investors in China, and the sort of the buzz about metaverse is phenomenal because in China, TMT, you really don't have anything else to invest in. So everybody's either going to what do you call that? The chips, the energy, new energy or whatever, or you go to metaverse. So there's tremendous amount of interest in metaverse. But when I look at, I've seen a number of business models. I don't know. If you look at this whole year, it just doesn't excite me as much as what Bezos or what Branson did this year. So that's probably my take.
Okay, so you prefer to go to outer space than live in the metaverse on Earth?
Yeah, kind of. Maybe we're already living in the metaverse, just we don't know about it. Hey, there's this theory. I've heard of this theory that we're actually living in a computer game or computer simulation.
This is the ultimate metaverse. We're a sim.
Yep. Simulation.
Yep. Have you heard of this explanation that try to sort of look at the Schrodinger's cat? Basically, when you observe, it's either alive or dead. When you don't observe, you don't know whether it's alive or dead, or it's like
Schrodinger's cat. Yeah.
In pure state. And the person saying that it's like in a computer game, right? where you have not fully explored the map, you don't know what is out there.
Yep.
It's only when you are approaching that point that the program is executed to determine whether there's a boss there or not. Am I going a bit too deep?
Today, Jianggan's going very philosophical today.
I had too much Japanese food tonight. Yeah.
So, what is the wine saying? Are you the dead cat or the live cat?
Yeah.
Are we in a sim, Jianggan?
I think we are probably the same. Yeah.
All right.
I mean, mathematically, depending on who you believe, we probably are in a sim.
Yeah.
And that wraps our show for this week.
Is that it?
You're in a sim. You're in a sim. We're all
Well,
in a sim.
I'll say one thing. Like, I mean, I think after hearing, Andrew and Dave discuss it, to me, it's just we have all the building blocks of the metaverse built off the internet, crypto and DeFi. This is just part of the economy piece that Mathball's definition fits. It just gets further integrated. I think AR and VR both can exist at the same time. Who's to say you could just log into VR to go to work, right? Or then some people have to work in the physical world. They're going to be plugged in all the time with an AR. I mean, technically, our phone is some type of AR, right? Like we use it to augment
AR,
everything
yeah.
we're doing already, right? So and that just gets further integrated where the form changes from we'll have some phone tablet always, but maybe the brain chip in your brain, some projections, like it's sci-fi, right? I mean, like it's going to be persistent no matter what, and they both can exist at the same time. So I mean, like the persistence is there, right? So and then what, like the last piece, like we talked about, like Dave says, the on-ramp will be work. I mean, that's exactly what COVID did. We're all like pushed to remote. We're fragmenting micro communities. All of this is just being powered by the technology that's unfolding, and it's just very early in the game. And then, like if you're a VC, everyone is shifting to having some part of the portfolio in crypto. You have to, because that's just the economy component of it, right? So it's something you just really can't avoid at this point. And for us, we're doing media. We're going to be part of the guys creating and feeding into these platforms that proliferate in the future. So I mean, we're more or less there, but it's just got to keep building and integrating to see how it unfolds, I guess.
Can I just?
Well, let me ask a dimension to this. Yeah, I mean, I think the more interesting question that we should ask as a group is like, is this something that we should actually be looking forward to? Because in many ways, it's very dystopian, right? Like what we're talking about. And I think that's
this is in the spirit of being extremely existential and philosophical, and I'll take you on this, Jianggan, and take what Dave just said and combine them together, right? One of the hypotheses that I've thought through about why we haven't met an alien organization or any sort of extraterrestrials is because maybe at some point they get so advanced that they develop AR, VR, and then they just get into these universes and they never leave their planets, right? Because these VR worlds are so rich, and they are like in this, like they basically build like Dyson spheres around their star to extract as much energy as possible to do like crazy multi-dimensional VR. And then they're like, we're enjoying ourselves and having, basically full bliss doing fun stuff. It's like gaming 24/7, right? And then they never leave. And that's probably why, what's that the Fermi's paradox. That's why we haven't found any aliens. Everyone's just
Fermi paradox.
Everyone's just gaming. But I'm just gonna so start. I consider that dystopian or consider that incredibly utopian. If you could feel blissful in a heaven of your own creation with 16-dimensional alien beings, addressing to you in all their glory, is that not a bad world to live in? As opposed to the suffering that is the physical life.
But suffering is life. I mean, if you believe this,
all right,
Jesus
is
life. But
yes.
Let's go. Let's do this.
All right. So two things that first, whether the on-ramp will be gaming or something else. One thing for me, the bet I'm going to take is that the on-ramp is going to be entertainment, right? If you look at most people don't use their phones to do utilitarian stuff. They're using it to use Facebook and Instagram. So I think there will be variations of these kinds of networks and entertainment that will exist. That will be the on-ramp. So I think Facebook is investing heavily. Like they're probably the largest investor in the metaverse right now, hence the rebrand, right? And they're investing in Oculus, but they're also investing in a whole ecosystem of tools and services that will allow people to live their social lives on these platforms, right? And I think there's always two phases. The first phase is when we try to do skeuomorphic things that resemble the physical world. And then there's a second phase where we realize we don't need to be skeuomorphic, and in this world you can fly, you can move three-dimensionally, people don't need to look like avatars, you can have sex with dinosaurs, whatever it is that you can do in this like VR worlds, right? And then there's a third phase where like shit just breaks through, and like even the rules of dimensions and whatever just disappears, and then you'll have new like 4D artists kind of creating stuff in like VR worlds. So I think that's like sort of like the path that we'll take. But and we can envision like phase one, which is like telemetry and meetings in VRs, but it's hard to imagine phase two and phase three, right? Like no one in the 1990s would have been able to foresee TikTok, for example. Which then begs the question of what are some like interesting stuff that you could see happen and that we can predict right now. And so see some of my predictions, right? Prediction number one, TVs will disappear. Once you have glasses that let you project the size of any screen you want on any wall, you will not need hardware that functions as a screen, right? And so the way we think about living rooms, the way we think about offices, these may change. We had a 20-year period where we had screens in our offices, and these will disappear, right? Mobile phones will probably not be the hardware of choice for us to interact with the metaverse. We'll probably again use some kind of glasses to interact with the metaverse and some kinds of hand signals, and before we move into full-blown brain-computer interfaces, right? And then you have all these like little things. So I think the hardware industry is going to get blown up. I think software is going to fundamentally change. We probably will not use Word, PowerPoint, and Excel because it won't make sense in a three-dimensional world that we interact with each other. But then that begs like, what are the new winners that will exist 15 to 20 years from now?
It's interesting that you say that because Facebook's first like metaverse, like during their metaverse announcement, the product that they demoed was like a workspace product. I don't remember what they call it. It's called like Facebook. I think actually it's literally called Workspaces, right? And that was, and if you follow popular opinion, that's like one of the reasons they had to change their name, because no one would adopt an enterprise solution from Facebook because no one trusts them anymore at this point. Yeah, so that's I thought that was like an interesting point. I don't know, because I think what this really is asking is like, what is it to be a human being, right? And like, and how much, because this is always the conflict that we have, right? We have like the fact that like our ability to develop technology and the pace that technology develops at far outstrips our evolutionary process, right? Like, I mean, if you think about it, like we're not that different.
Or is it part of our evolutionary process?
Well, this is the question, is like at a certain point, like what does it mean to be a human being, right? Like if I upload my brain into the fucking internet or into the cloud and there's like multiple instances of me, which one was the original me? Or are any of them me, or now do I branch? And then there's like,
dude, you're already a computer. You're already a computer program working on shitty wetware, right? Like the biological constructs that we are made from are pretty terrible. They last 70 years, they oxygenate, they get fat, and they don't like do very well, right? We have silicon substrates that are able to carry conscious thought in some way or form within the next 20 or 30 years that will be much more persistent, that have better memories. I don't know why you have this big tie to this like shitty wetware that you have been given.
Oh, he's definitely not. He's going to live forever.
That's because that's what we have. First of all, I don't, because I don't know the rest of you, but I plan to freeze myself and live forever by uploading something to the internet, right? But there's a question of unintended consequences, right? I think this is always what I kind of come back to, is like, we can have all these great ideas and all these great dreams, but like, we invent a new technology or invent a new framework system, and we can never truly predict what the consequences of these things are, right? Like Facebook is a great example. Half the shit the CCP does is a great example, right? So yeah, maybe in
Bro,
years,
I mean, my take on this is you just gotta keep making mistakes, and then we figure it out and we fix it. That's what we've been doing as humans. When we made fire, did we know it was gonna burn shit down? No, we thought it was gonna cook some tasty food, and then we realized, oh shit, that thing can kill too, right? Every piece of technology that you create is going to have some harm, but if we just get scared of it and we go, no, fire, too much heat, too much light, no, then you just never find advancement. And ultimately, being a technological animal is part of our evolutionary culture. Like that's what we evolved brains that were able to be independent from the instructions within our genes, and now we have this conscious sentient thing that's built on pretty rudimentary wetware, but still trying to create like interesting lives. We're going to make mistakes along the way. Like every generation has its Facebook, right? And then we've got the shit around global warming to deal with. But you can't be so negative about it, bro. Like you gotta hope that people figure it out.
But that's my point. Is I'm not being a Luddite, right? I'm not saying let's stick our fucking heads in the sand and pretend like technology doesn't exist. But at a certain point, right, you'll invent something, and like we are short. Like by definition, the human species is short-sighted. We're not meant to do long-term planning, right? And at a certain point, we might
until our wetware gets on that until the
civilization.
consciousness gets into the silicon and the silicon can live for 3,000 years, then we start having long-term views on things.
Sure, or we invent the robots.
Oh, you're just talking about
so
AGI.
It's one of these two things, right? Yeah,
Yeah,
AGI.
true.
That's the thing. It's AGI. Like
We have 3
some
minutes,
dude
guys,
invents
by the way.
AGI, and he assists us. So yeah. Anyway.
All right, guys, we went off the far left. Jangan, why don't you give us a closer, your wisdom, or your pragmatic wisdom for us?
Please bring us back.
No, I don't have any wisdom. Where are you guys, Alex and Andrew, back to Asia?
I'm coming back the 19th. I'll be free of quarantine the 27th. So we should meet up.
I will still be in Kuala Lumpur. Andrew,
We're gonna just come to your house.
I would
So-
like
Yes, come
to
to my
be
house.
back on the 21st, but I'm finding out that people in the UK need to get a tracker and do hotel quarantine as opposed to home quarantine. If I have
Excuses to
spend
not come home.
If I have to spend also my other half decided not to come back, so now I have no one less reason.
Yeah, Amy's in Melbourne, so what does it
Yeah.
matter?
Yeah, just go to Melbourne.
No, my family's there. I want to spend Christmas with my family, right?
That's right.
Also, I
fair
really
enough.
miss Jude.
Yeah, fair.
Right? I haven't seen Jude in 3 months.
I haven't seen Jude.
Yeah,
That's
I
why I'm
mean,
going home.
It's a struggle. I think about Jude often. I see a dog on the street, I shed a tear. Right? It's rough. You think I'm joking? I'm not even joking. Like I keep meeting people's dogs and petting them and going, I have a friend's dog. Like, I can't even say it's my dog, right? It's like attached to someone else's dog.
I'm a godparent to a dog.
Yeah, and I miss it.
So
I
in
really
your
wanna go back.
in your version of the metaverse, are they going to be like little meta Judes running around?
Dude, I'll
Oh
have
God,
split
Sabrina would
puppies.
have like thousands of dogs probably if it's like digital for sure.
That's right.
All right, guys. I'm glad we got to squeeze this in. Somehow it's been a long, dry spell, but we'll meet again 27th, 28th. Film another one before the new year, and then we'll ramp up and prepare for the 2022. 2222.
gonna be a great year.
All right. Cheers, guys.
All right,
Take
guys. Good episode.
Bye, guys.
Okay.
Ah.
All right, guys.
Okay.
Care.
All right. Enjoy KL. Enjoy London.
Bye, guys.
Bye.
See ya.
Bye.
Yeah.
Bye.